Let me welcome Kunal Bothra as well as Naresh Mirani on the technical side. And we also have Anshul Saigal, who's the founder of Saigal Capital. A very good afternoon, gentlemen, and thank you so much for your time. First up, Kunal, help us with your take on the benchmark indices, the kind of stellar run-up that we have seen or recovery. How are you playing this and how are you looking at the index right now?
Yeah, absolutely. I think a phenomenal recovery, for the markets, and from a point where we were almost 300, 350 points down for the Nifty to close at 200 points in the green. I think it's been a phenomenal recovery of sorts for the indices. 1500 plus point recovery for the Bank Nifty from its swing lows. Now, what this tells you, one is that the market has a lot of support and a lot of buyers at every lower levels. So even though on an intraday basis there was a very sharp correction, for the index, my sense is that the major reason for the market correction was the rise in the dollar index, which has come back again to that 107 plus mark. So I think if that settles down back to that sub 107 mark, we should see one more leg of price uptick. The second, the most important point is that after such kind of a sharp correction, there is and we've seen this historically also, that there is a change in the behavior of sectors. So, for example, in the last few days, we've seen IT index, we've seen metal stocks, we've seen the banking index being at the forefront of the market rally. Today, for example, you've seen a very good recovery into the FMCG stocks, into the infra basket, consumer durables, etc. So my sense is that going forward, we may probably see a differentiated move across sectors, and there could be a possibility that these sectors may have a fair or a higher share of positive participation with respect to the indices. And after this kind of a stellar recovery, my expectation is that we should now be looking at 25,000 being breached on the index over the next couple of days.
Sounding optimistic, Kunal. 25,000 doesn't look so far right now, is what Kunal is saying. But Nuresh, coming to you, I want to understand that while we have seen a stellar move coming in across the benchmarks, there's one space that's not participating in this rally at all today, and that's the broader markets. Now, over the last couple of weeks, we've seen whenever there's been a weakness in the markets on the benchmarks front, the broader markets have shown some kind of support coming in. Today, that's not happening. Can you tell us why this is happening and what's the outlook when it comes to the broader markets also going into next week's trading session?
So if you look at the recovery from the lows, we ended up making a new all-time high on the small cap index. The mid cap index also recovered really well. So if you were to remove out today, we are still outperforming on the mid cap and the small cap indices. And today's move is again another one-off move. We've been seeing this happening last week also on Thursday when it was Nifty expiry. We saw a move wherein we fell 200 points, recovered all the way, saw 500, 550 pointer recovery. And the next 5 sessions, there was no follow-up price action. Today also, we went down 300 points, have recovered into plus 200 points. We are back to 24,700, 800 band. We need to see whether we get a similar follow-up move next week, or we are looking at it as just a one-day expiry move, because this is what it looks like as of now. So if we sustain and close about 24,800 next week, then we call out that it's a flag breakout and we go to 25,200.
That's the outlook on the broader markets. Anshul, hi, thanks so much for joining us on the show. Good afternoon to you. I want to talk to you about the FMCG sector because it's been the top flyer, the high flyer today rather. And, we've been reading news for the last couple of days that palm oil has now even outperformed sunflower oil and soybean oil. So commodity inflation is going to persist. You have companies that have also started announcing and undertaking price action, price hikes going ahead. So what's your outlook coming in on the entire FMCG space, given that the companies have now started undertaking price hikes? And fundamentally also, what do you think Q3 is going to shape up to look like for these companies?
Hi, good afternoon. Happy to be with you. So if you look at the last 3 to 4 years, this is a space which has consolidated. You have not seen much price action in the FMCG space. There were two reasons for that. One was that prior to COVID, this was a high-flying sector. Everybody was jumping in and buying here because it is here that you had certainty of cash flows. And so these stocks were doing very well prior to COVID. Their valuations rallied quite meaningfully. I recall that some of the leading players saw their valuations go from 40 times price to earnings to as high as 65, 70 times price to earnings. Now, after seeing such a valuation uptick, you needed to take a breather. And that's really what happened in this space. that got combined with the rural economy and consumption in the rural economy being a little tepid. As a result, we witnessed volume growth being kind of pedestrian in this space. Again, that was a reason for valuations to not see any further uptick and that consolidation to play out. Now that we've seen 4, maybe 5 years of consolidation in this space, it is likely that this space will catch the market's attention. We are also witnessing a somewhat of a turnaround in the rural economy, the tier 2, tier 3 cities. And if that plays out, this will be a sector which will be in focus. Bear in mind that while this sector has consolidated, the rest of the market has seen valuation uptick, and hence the differential in valuations between this sector and the rest of the market, that has compressed. Hence the interest in this space, and it's quite likely that this interest will persist for some time to come.
Okay, likely to persist as far as the interest in FMCG is concerned, because the sector valuations haven't moved up. Anshul, what's the take on telecom as a sector? And if you have a view on Bharti Airtel specifically, today there's a lot of news flow in the sector. Bharti Airtel is sitting with a gain of around 4.5%. There's that capex and the capex announcement which has come from Vodafone and their investor presentation talking about how price hikes are inevitable for the sector. Would you want to play this theme or just stay away?
Hi, Anisha. So this space, it's an interesting space also because there is government intent to really give tailwinds to this space. I think it was yesterday or maybe the day before that the minister indicated that they will support this sector going forward as well. There has been regulatory action in regards to the bank guarantee requirement from this space that got eased. Also, other regulatory requirements in this sector have been eased. As a result, balance sheet pressure on this space has come off. Say 2-3 years back, balance sheet pressure used to be quite intense. In addition to that, let's look at the name that you mentioned, Bharti. Let's go back 3-4 years. And the ARPUs in this space, because of competitive pressures, were somewhere in the region of 125 rupees for Bharti. And that was a significant fall from the previous 2 or 3 years, where the ARPUs had reached as high as 200, from where they fell to as low as 125. Clearly, that was the bottom. The peak on competitive pressure was then. And thereafter, the ARPUs have only ticked up. So from 125, if my memory serves me right, we're at about 225 today. Now that tells you that pricing pressure is behind us, that price uptick is what this sector is seeing. And as history tells us, in sector after sector, if you see price uptick, that leads to margin uptick, and it gives ease to the balance sheet overall. ROEs go up. And that is always good for valuations. We've seen some of that play out in this sector. Probably because of the consolidation, some of it is ahead of us. So this looks like an interesting sector to remain invested in.
Okay, remain invested. That's the view coming in as far as telecom sector is concerned. But Anshul, I just wanted to quickly get a take from you regarding cement as a pack as well. Again, one sector which hasn't got enough, credit to it in terms of the valuation uptick or the stock prices uptick, because there was that lack of pricing power. Finally, that seems to be coming back. Would you agree?
Anisha, what has happened in the cement sector is quite interesting. In the last year to maybe 2 years, 2 large players have kind of instigated a consolidation in this sector. They have been buying out less efficient players and ensuring that the sector gets consolidated. The pressure also in this sector is because price uptick in this sector has not played out, while costs have gone up over the last 2 years. And hence, the impact on the less efficient players has been quite intense. Their profitability has taken a huge beating. Now, this sort of shakeout in the sector is probably halfway to 3/4 way out. Like we played that out already in the past. And some of that is remaining going forward. particularly in the south. Once this shakeout is out and you have major consolidation that has played out in this sector will become a very attractive sector to look at. And it is because of this shakeout that valuations have not really gone up. As I mentioned, prices have not moved up while costs have moved up. That has impacted margins. And as a result, valuations have remained in a range. Once the shakeout is out, it looks like this is a sector which will become quite interesting going forward. And I think that we are probably 2 quarters away from that scenario playing out. But this does look like an interesting sector just now, given that it has consolidated for nearly 2 to 3 years.
All right. Thank you so much, Anshul, for sharing your take on the various sectors. But
if you like this video, then like, share and subscribe to ET Now.